Yeah, the world of tax is still set up for married couples in that there are advantages. I just want to talk about three areas. Firstly, quickly, inheritance tax. The threshold when inheritance tax applies is £325,000. So if you die and your assets are less than £325,000, there's no inheritance tax. If you die and your assets are more than that, there is inheritance tax. But if you are married, as a couple, you get £650,000 worth of inheritance tax relief before you hit inheritance tax. So, as a couple, you might die with assets of £400,000. As long as you leave them all to your spouse, there is no inheritance tax to pay, and then it's looked again when your spouse dies. And that's a big advantage over, say, boyfriend girlfriend when one dies, when suddenly one's died, the other was left with a big inheritance tax bill. So there is an advantage there. The second area I want to talk about is capital gains tax. Big advantage that has implications for income tax as well. When a spouse transfers an asset like a property or a share in a property or shares in a business to another spouse, the transfer happens at a no gain, no loss value. So there's no capital gains tax to pay. And when those assets are eventually sold, you can equalise the holding of the assets by gifting between the two, so you maximise the exemptions for the annual exemption for capital gains tax, and also you can make sure you pay at the lowest possible rate of capital gains tax. In contrast, when non-married people transfer assets, they're always done at market value. So suddenly a gift from, say, a boyfriend to a girlfriend can result in capital gains tax having to be paid at that point in time when there may be no cash to pay it. So there's definitely advantages there. And then moving on to income tax, there's a little thing called the Marriage Allowance, where a non-taxpayer can transfer 10% of their personal allowance to a basic rate taxpayer, and overall that saves about £240. But the bigger thing is, because couples can transfer assets without worrying about capital gains tax, you can, if you're earning a lot of money and your spouse doesn't earn a lot, you can make sure all the assets goes to the spouse. So her or his, obviously, income is all at a lower rate of tax than perhaps it would be if it was on top of your big salary, and then and vice versa. So you might suddenly lose your job and your spouse is doing very well, the assets come back the other way, so that you can equalise, so that both of you make full use of, say, your personal allowance and your basic rate tax band before either of you hits higher rates of tax. And a lot of tax planning around small limited companies is around equalising the income of a couple, and that's much easier when people are married.